Hi, this is Chris Visser. I'm the Senior Analyst with the ATD NADA Official Commercial Truck Guide. With the first half of the year behind us, the used truck market is holding strong despite some headwinds. First quarter results of 2011 were through the roof compared to 2010. Prices, mileage, and volume were all up substantially over that period due to the extreme undersupply of used trucks that's been in place since the end of 2009. Sleeper tractors brought 40% more money on average than they did in the same period of 2010, and this is despite steadily higher average mileage. Keep in mind that the successes we've seen in the used truck market have been limited to the on-highway side of things. Construction trucks didn't see price increases over the year due to a lack of a rebound in the construction industry in general. And most segments of the medium-duty trucks are still bouncing along the bottom. This is because of slow growth in the consumer sector as well as a non-existent housing construction market. Now, we did see a substantial change in May data. This is the first month we've seen a big change in the upward trend of sale prices and volume increasing. Particularly, major reduction in sales volume reported from individual dealers. Now, with prices remaining high for May, equal to or higher than results for April, I'm thinking that this is a supply issue rather than a demand issue. So buyers are still out there looking for late model, low mileage used trucks, but there are simply none of them out there. By the same token, these buyers might be moving towards new trucks due to comfort with the new engine technology, increasing comfort there, as well as they're being wary of continued price increases. Raw materials and components are all increasing in price, which makes the price of the truck higher. They might be willing to bite the bullet and ante up for a new truck based on this at this point. General economic factors that are impacting the new and used truck market were essentially flat in May. We're looking at industrial production, which has been the driver of the new and used truck demand since the end of 2009. A couple of minor surprises there. Factory output was up 0.4%, 0.6% if auto production is excluded. And this indicates to me that the auto sector had less of an impact on production than it did in April, which is a good thing. It means that the automakers are ramping up quicker than expected from the Japan disasters. The Japanese Toyota, in particular, has ramped up quite a bit faster than they predicted. Consumer-focused durable goods were also up, more notable 2%, just under 2%. That's spending on goods like furniture, carpeting, and lower gas prices were probably the factor there. This could help the medium-duty market if it becomes a trend because that sector of the market is more exposed to consumer spending. Freight tonnage was down unexpectedly in May, just over 2%. This might be within the margin of error of that survey, so I'm not too concerned about it. And economic fundamentals are still solid, so I'm considering this a minor blip in a continued slow but steady recovery. Looking towards the future, the rest of the year, new trucks will continue to be attractive to buyers as the average to low mileage trucks continue to vanish from the marketplace. These buyers are also more comfortable with the new engine technology, the SCR technology, and they're concerned about future price increases, which are more or less inevitable. So they might be biting the bullet, anteing up for the new trucks at the expense of looking for late model, low mileage used trucks, which largely don't exist. We might see an increase in the number of 2008 model year trucks hitting the marketplace. These will hit the market in slightly higher numbers with slightly higher mileage, but basically due to the continued undersupply, we'll just see maybe a relaxation of the appreciation instead of any downward pressure on prices. So prices aren't going downwards anytime soon. They're just, we might see the appreciation curve decrease or flatten out. Supply of used trucks in general will continue to be steady throughout the year thanks to continued strong new truck sales. Obviously, more new trucks being purchased means more used trucks will hit the secondary market. And the return of full auto manufacturing combined with lower gas prices will both support higher freight tonnage for the next few months. And with the continued undersupply of used trucks in the marketplace, pricing should remain at high levels.